Sean Darby is the Chief Global Equity Strategist at Jefferies. Again, it is a big call, Sean. Always good to have you on.
Good morning.
Let's go with the positive.
Well, I think the positive is
the bullish on
the US and the NAFTA trade. I think the US economic data will probably still trend along forecasts. You've seen the industrial output data. Housing seems to have found a bottom, and so far there's been no repercussions from Eurozone. So I think that's probably still the picture going into the third and fourth quarter. Key thing to remember is US exports very little to Europe. It tends to export 40% or so to Canada and Mexico. So that sort of trade links are very much work in favour of the US.
Let's define the word bullish. Is it bullish on equities? Is it bullish for 6 months? Is it bullish for 3 months, 12 months?
Well, I think we took off a lot of our bets in second quarter. We felt that things had got very overbought, and certainly the markets had not discounted the type of scenarios that are now appearing in the radar screen. I think the key thing to bear in mind about equities is that there's probably still enough ammunition out there from policymakers to squeeze prices once or maybe twice until the end of the year, but generally the equity market is going to find it very hard going.
Now, the bearish, I hate to say it, Hong Kong, China, India, Australia, all these factoring, and of course a lot of European countries as well, including Scandinavia, Sweden and Norway. So quite a few, 15 I've pointed out.
That's right, yeah. I mean, what we're finding, unfortunately, is global growth numbers are trending downwards, and a lot of these economies, even though they're not part of the Eurozone bloc, are going to suffer from the fact that economic numbers are going to disappoint. And I think whilst some of these countries have got very good bank balance sheets, very good macro fundamentals, people have been hiding there over the last quarter or so, and I think gradually they're going to capitulate and find themselves actually moving out of these equity markets, probably going back into bonds.
Let's talk about Japan if I can, Sean. Japan, looking at the story here, Japan falls into the bullish camp. But you are quite critical about the Bank of Japan.
Well, we were disappointed that, of course, that the initial impetus that the BOJ has started to move towards a more unorthodox policy actually sort of...
Are they being cautious, do you think, ahead of something that they don't like Europe?
Well, I think there's a couple of things here. Is that you've got to realise in the background there's an enormous competitive devaluation game going on, and everyone has to play their parts. And I think the longer you leave intervention, the more like the other countries are actually going to do it ahead of you. And you've seen that with Eurozone over the last 2 to 3 weeks. So unfortunately, the longer you resist the unorthodox policy, the more difficult it is for asset markets to perform.
So overall, again, looking at the global economy, clearly you've got the fiscal cliff, as Tim Geithner referred to, the end of the year for the US, when of course these tax cuts are out and the new administration. So 2013 looking quite tough for the US.
I think it's going to look extremely challenging for economic growth. Bear in mind that if you're going to start to turn around these economies for 2013, you need to be putting into fiscal action right now to get those economic numbers for 2013 to actually look reasonably robust. And I think that's the difficulty. Austerity measures in Europe are clearly still working their way through.
For now, until François Hollande and Angela Merkel agree or disagree on growth and austerity.
Well, indeed. But again, the packages probably, even to reverse that, probably only still come into effect with some lag, probably into 2013. And bear in mind, you've also got the headwinds of a very high oil price, which have been sucking a lot out of the consumers of these countries as well. So as I said, unfortunately, economic numbers are still going to be on the trend downwards.
Sean, how do you make money then in this market? Do you sit on cash? Do you jump in, take some risk maybe in stocks? Do you look at the major companies with strong brands, like, for example, McDonald's, Coca-Cola, GE?
Well, I think the irony is that the corporate sector is still undertaking M&A. They're the very people who can extract value from equity markets, and they're doing that because they can scale their businesses, they can lower costs and grow market share irrespective of what's happening in GDP, and it does actually tend to work in the favour of the big, large multinationals. And I think what you'll find again is people just keep capitulating and buying into those. You'll have this sort of Titans trend, as you saw in the 1970s, early 1980s, where everyone just moved into large caps, and I think that's going to be the name of the game for the next 6 to 12 months.
Sean Darby, many thanks as always for coming in today. Sean Darby, the Chief Global Equity Strategist at Jefferies.